morning, everyone, and welcome to the European crossover webinar. And we do see the euro under some kind of pressure right now. Obviously, the big news is going to be Italy and the woes they have there. We talked about that, mentioned it yesterday, covered a couple of stories in regards to that. And it's the whole budget story, but that's really taking the euro for a pretty good little knock here. You can see right here, we're in a very key area here, this 1580-ish. I did some analysis last night. We're looking for a move down to a stretch move down to 1606. You see 1618 was at 38%, but wow, we've even gotten past that stretch move of 1606. But you can see it's a pretty key area right here, this 1580. But right now the sentiment is just simply so, as someone mentioned in the chat room, is, it's negative, and that's exactly what it is. It's so negative. But we got a very key area here, this 1580. This market has really fallen off. I think, to me, obviously, someone's asking about gold, and I think the reason, although gold reached that area we were looking into, not one of the areas, but I'm saying an 84 here. But we're looking for potentially a move down here. But the reason you haven't seen it is because part of the move is inflationary, or in this case, a lack of inflationary news here in the euro. But certainly the woes coming out of Italy are certainly going to take its toll here on the euro and really keeping the pressure down here. I thought we may be seeing a dip in here. I'm actually picked up a little bit long in here. I'm thinking that a bit overdone, but obviously the pressure still remains. But this is a key area down here. Also in our dollar index, if you remember, our target was for 95, a break above 94.68. To our close would open the door for 95.21. We've got to the 95.21 and then some, although we're at that key 95.32. Remember, that was that area that every time we'd come up towards that area, the market would turn around and fall off. You see right here. And so that was a pretty key area here at the time here with the dollar index. But my target here from the prior day before was 95.20, and we kept that 95.20, and we did get that 2-hour close here. I think this has more to do with what's happening here in the euro as opposed to the dollar per se. But we do have a story here coming up in regards to concern for dollar shortage, and it could ramp up a little bit higher as we go into month end. I guess we might get the market scared a little bit at these levels and see trying to think of a rampage or run on this where everybody just wants to go and jump out. Things are pretty low here for the going on with the Italy situation. I think someone had just posted here that Italian banks are limit down at this point. But going back in here, mentioning here as far as economic news, well, we certainly went and saw here some negatives here when it comes to inflation, and that's a concern here with the euro, because part of the talk has been, they're going to be one to go in and pare back some of this stimulus. So that obviously weighs on it, the whole issue with Italy, the whole thing. So we'll have to see how that goes and plays out. But obviously this is explaining the pressure that we're seeing, although we're in a very key area here with the euro. We do have consumption, personal income consumption, core PCE also coming out 8:30 Eastern, and Canadian GDP. So that's going to go and also play into this, but that's for later on today. Let's go on and we do have Michigan consumer confidence coming in also. Par was 96. They're actually looking for a pretty good bump here, all the way up to 100.80 for Michigan confidence, University of Michigan. And Chicago PMI is going to be out at 9:45 Eastern. And let me go and get the news out. Be just one moment. And after a pretty good run up here in the Canadian dollar, we did see this market pair back. Our target, remember we had done some analysis, we're looking for 30.93 and 30.96 is 61%. We didn't even have a stretch if we went beyond that. I didn't think we'd make it all in this one day, but we did, and we did go on and pair back quite a bit, but that was the target we were looking for here on the dollar CAD. Says the Canadian dollar lags a greenback and beats other G10 currencies. The Canadian dollar fell to about a 2-week low versus a greenback on Thursday. Criticism on Wednesday by President Trump that talks to modernize NAFTA were moving too slowly has helped send the loonie to its weakest intraday level since September 11th, but Canada shrugged off the complaint and made clear it kept negotiating as long as there was a chance of success. You have to let the market do a little bit of rethink, because I think the path forward on a bilateral U.S.-Mexico deal is still pretty challenging. Still think there's a reasonable probability of a deal this week, and say Greg Anderson, BMO. It always gets most intense at the end of any type of negotiation because people actually have to move red lines. The Bank of Canada has also been hiking rates this year, and Polos on Thursday could provide clues on the prospects of another hike in October. And on to the Australian New Zealand dollars nurse losses as yields favor the greenback. The Australian New Zealand dollars were nursing losses against a broadly firmer U.S. currency on Friday. In a world where most policy interest rates are either close or to or at post-crisis lows, those raising rates substantially are only in emerging markets anxious to shore up their currencies against the dollar. The medium-term outlook remains broadly positive. The comparison is also stark across the Tasman Sea, where the Reserve Bank of New Zealand had just reiterated its intention to keep record rates at a record low 1 3/4. While the economy is in good shape, the bank remains determined to sit on its hands for quite some time, said Annette Beecher. Going forward, we expect RBNZ Governor Orr to keep the pressure on the New Zealand dollar. As a result, short-term U.S. yields are less than 109 basis points above those in New Zealand, all of which keeps the Kiwi down at 66.10. And sterling falters on GDP as Brexit pressures grow. And we have seen the cable going in pair back here. We thought it was open for a little bit of correction. It has gone past that 30.56, and this is where we had some support just below that, I think from a couple of days ago, but we're starting to break beyond here. It says the sterling fell to an 11-day low on Friday after data showed that British companies had cut their investment in the second quarter. The pound trading around 30.65 dropped to as low as 30.35 before steadying at 30.57. Currently, we're actually at 30.38 and really putting the pressure on. The Office for National Statistics confirmed a previous estimate that Britain's overall economy grew by a quarterly 0.4% in April or June, but lowered the annual growth in the second quarter to 1.2 from the previous 1.3. That has certainly weighed on the market. The Conservative Party holds its annual conference next week, and the focus is on whether Prime Minister May can win over critics on her Brexit proposals. May had warned last Friday that Brexit negotiations with Brussels had come to an impasse, inflicting on the pound its biggest one-day loss since 2016. The focus is now shifted to the domestic front as May seeks to overcome divisions within her party over the strategy to leave the EU in March. We expect the pound to decline to 124 in 3 months and 120 in 6 months as Brexit approaches, but a deal remains elusive, says Stephen Gallo, head of European trading at BMO. We expect an eventual soft Brexit agreement, but we think odds of a cliff-edge Brexit will increase measurably before a withdrawal agreement takes shape, he says. Well, that's certainly going to go away on the cable. And the euro slips, and this is the big news of the day. Euro slips as Italy agrees people's budget, dollar buoyant. The euro fell to an 11-day low on Friday after Italy's government agreed a budget overnight seen by some investors as defying Brussels. Political wrangling over the budget and heavily indebted Italy has put a lid on the recent revival in the euro's fortunes against the dollar. The single currency recorded its biggest one-day decline in 7 weeks on Thursday as the battle over fiscal policy intensified in the eurozone's third largest economy. The government is targeting a budget deficit at 2.4%. It does come as a surprise that the euro exchange rates suddenly react in such a pronounced manner to fiscal factors, says Ulrich Luckman. But market participants are now hoping for a normalization of ECB interest rates, and that's why the euro generally is still quite strong. The euro on Friday fell 0.2 to 16.15 after slumping almost 0.9 overnight versus the Swiss franc. The dollar, meanwhile, remained buoyant. It advanced against the British pound, the franc, and rose to a 9-month high versus the Japanese yen after data reinforced upbeat views on the U.S. economy and the recent Fed hike. The broad rally by the dollar is also helped by seasonal factors. It has coincided with U.S. investors bringing funds back home for the months since, said Yukio Ishizuki, Forex strategist at Daiwa. Markets will now turn to the Eurozone preliminary inflation data due later in the day to see if they can support ECB President Draghi's woes on prices. German yields drop as core inflation dips to adds to the Italy budget. The yields on German government bonds dropped 6 basis points on the day to 0.47%, extending a fall that began early in the session. Demand was initially fueled by overnight news that Italy's government was targeting a budget deficit of 2.4%. Like I said, as we go into the end of the week, month end, this is certainly weighing here on the euro. And gold hits a 6-week trough set for the longest monthly streak in 2 months. We did go and see that break here in gold. We come into an area here that's 1584-ish, had marked on the 30-minute chart. So we saw a bounce, but we're still lagging here. We're not seeing any big moves in gold. Part of the reason with the euro is it's about lack of inflation. That has already kicked it lower, and then the concern overall, the concerns with Italy. So I think that's why people are wondering why gold hadn't already saw a better reaction on that, and that's primarily the reason there. Be just one moment. I was looking for, there was something else I thought was key in light of where we were today with this. One moment. If you have the opportunity to see this, Jamie McGee were putting in a story here in regards to a dollar shortage. And I don't want to spend too much time because we want to get onto the analysis. But if you follow Jamie, he's pretty good. But he's talking about a possible dollar shortage, and that's where we might see a greater demand. Personally, I don't think it's really about the dollar per se as much as it's a euro story here. So that. Now, as I mentioned here, the dollar index, we're right at that key 95.32, a little bit of an overshoot. That's a key. My target here from yesterday, remember from the day before, was a 2-hour breakout above 94.68. Would target 95.21. This actually saved me from doing, putting on a couple of trades going against the market at the time. So I was glad to go and stick with these technicals. But as I mentioned, it kept creeping a little bit higher. There was a pause at 95, which is a 61% of this move. But my analysis pointed to a move to 95.21. We've overstretched a little bit, and that's reasonable as we come into the end of the week and into month, and the woes with Italy continue to weigh here. But the euro is maybe trying to find a little bit of support. We talked about that. We'll get into the bias chart. This is a very key area here for the euro, this 1580-ish here. Right in here, very key. So let's go on and move this out of the way and move into the bias chart and get ready for the day ahead. Now, this is where we had our support. This is actually the market ended up going to this level. It made it there, and then eventually we tried to hold. from the 1668-ish. Right here, you can see this is where the market actually tried to make a little bit of a stand. Right there was our 1668. We actually took the dip down there, and market tried to make a stand here. We relented, and we're doing okay overnight. And then the stores, you can imagine, we've had quite a fall off. If you think about, look, we were here. Yeah, it's almost reminiscent of the night before. Here we were the night before, and everything was all hunky-dory. And then also we started getting the news out of Italy, and we made this fall. Well, here we go all over again. The market's just hanging around here. We'd already come down to this 1630-ish area. Market's trying to hang around, and then this Italy news and inflation, and here we go sliding down the tubes. But we are at a key juncture here, right here with the euro. See that coming in right there, 1582. Currently we're at 1577, but this is a very key area here. A lot of volume traded here, and we've seen, if you think of it, we've seen quite the fall here. And this, you're looking, easily from this key area. There's the 1771. Remember, we wasn't that long ago we were there, and we're talking about the analysis we've done is if we got a 2-hour close above 1771, it would point much higher. And then the trigger was 1733. Once we got past that 1733, that opened the door for a much slower move. Certainly not expected this low. But we have fallen off quite a bit. So from this area here, we've already fallen off 200 pips. That's a huge move, folks, in such a short amount of time. Even just from the break of 1733, you're looking at about 160 pips from this area here. So it's pretty oversold, and we're into a very key area here, this 1582. So we look for support. I think the support is right where we're at right now. But like I said, end of the month, concerns here. You look at these body closes right here. All right, you see right there? So we'll say right there, 1578. We'll call it 1578 for support, although we are below it right now. Let's go and take a look at a daily. Where that 1541 is absolutely huge. Remember, this 1550 was such a key pivot before 1552. If we were to drop back here, looking, I don't see anything definitive here other than this 15, and that would be, if it really gets shellacked here. The only thing is, I think that if this had been a day before, I think we could make that move down here. Anything's possible on a Friday, but considering how far we've fallen, it's a lot of pressure. My point being is we're into a pretty good area where we've seen a lot of trading. Let's move this out of the way. We're in a pretty good area right here. You can see this is 1582. We actually have our support today for 1578. But I don't know who's going to step in and try and sell it even further. And that would be key. One of the things I was looking at, and I didn't think we'd even make it down there, you know how I always draw these zones. And what I find out lots of times is when they break into a zone, what I found, regardless of what market it is, when I draw these zones, you see the market usually go into the zone 50%. Well, we've already gone beyond the 50%. And I'll show you what I'm referencing here. The actual zone itself. And 1597 was right there, was the 50% of the zone here. Now, let me go on and my point being is I think we're pretty well overdone here. Now, like I said, it's a Friday, end of the week, end of the month. You're going to see that pressure, but you got to wonder who's still going to be selling down here after a pretty big fall. I think you probably knocked out quite a few people. I saw some people Buying and adding on the way down. Holy smokes, kind of feel tough for them, feel bad for them. Been in that situation before, and one of the things, as I mentioned before, is you got to respect the technicals. One of the things that helped me yesterday was this one right here, and I'll point to you right here. We did the analysis. We shared that yesterday. I did this also at ForexAnalytix, which was we pointed out the move in the dollar. Remember, up or down? I thought personally the dollar would fade, but one of the things that saved me here was right here, the 2-hour close above 94.68, and the analysis was, hey, a 2-hour close above 94.68 is going to point, and there's my arrow, to 95.20. That was my target. That's our analysis. We did here in the ForexAnalytix, and we did right here, right there, 95.20. Well, we actually have gone past that, but that was the target. That saved my bacon yesterday by respecting the technical, saying, hey, look, can't be taking the other side of the trade and sticking other than scalps if we're above this 94.68, because I'm looking for 95.20, and wow, did we get there pretty doggone quick. Now, this is a very key area here. We talked about, you've been following us. We've talked about this 95.32, probably reasonable. You get a little bit of an overshoot here. But like I said, we've had such a huge fall, and I don't think it's so much a dollar move as it is, per se, what we've seen here in the euro with Italy, and then we got a little bit of a lack of inflation. So this makes sense in a way from a technical standpoint that you would come. And look, we've come right to this breakout. And that's one of the reasons I kept this, just in case we fell apart. Like, I want to keep this. I go, I really don't think we're going to come down in here. You can see we're right where the two lines meet. I'm thinking, okay, well, I doubt they'd even make it down there. I did the analysis last night, and I point out the 38%, because we were up here trading around 1640-ish or whatever. And I said a stretch move would take us down to 1606. Well, holy smokes, we even went beyond the stretch move, which is 1606. But my point being is I think the market would have a tough time trying to add on to further losses from here. Anything's possible, but heck, we've had such a huge move down here. So I like the 1578, kind of give us a little bit of context where we stand. Resistance today, well, it's going to be tough for the euro to go and get any kind of a rally unless we got some news out of Italy, and they may, considering you get the banks limit down, they may try and work something out. But resistance for right now is going to come in. We had the 1619 here. That was going to be a little bit of support on the way down. Obviously, we went past that. We had 1618 to 38%. We're just going to push it to, let's say we get a little bit of a rally, 1625. So it'd be 1625 for resistance. We can make the case the market could stretch itself up here to 1635, but we'll go with 1625. Any kind of rallies there, the market is going to go in and try and step in and probably anybody that's long will probably use any opportunity to run up there to get out of their positions. So it's going to be 1625. And let's change that to bearish. And let's go to cable. And boy, we've seen a pretty good fall in cable. Man has really has done very well in cable. So quite the pair back here. We know about 3056 being a key pivot. I guess we have to add our intraday data further back, but we know that we've had this is a huge level, this 3056, and we are below it. Actually, at the time when we did that, I think we had our support just there, which was 3033, but I think we updated it from yesterday. You see, we updated, moved it up when the market was still doing better, but we had it below there. I think that was right where we had it, which was for the FOMC day. May have been just a hair bit lower, but there's some support coming in right there. Well, we're actually going to go and move it to try and see if we can't find an area of volume, and that would come in. Oh, let's go right there, which would be 3016, but you can see right there this touch just below 3056. Might have to push it back a little bit further. Let's go right there, 3016 for today. As far as resistance, well, let's go in and see where on any kind of rally back, people may be looking to think, well, maybe we got a little bit, jubilant on the way up, because it had a phenomenal run on the way up here with cable. And resistance would come in right there, 31.24. That'd be resistance, 31.24. You can see this line's coming right across, right there, 31.24 for resistance here in the cable. Still has a bullish stance. And let's go and move into the Aussie. Well, we had our support yesterday at 72.05, and the low was 72.03. I like to do my my support and resistance levels on where I've seen the most touches, because the thinking is that's where the volume is. Okay, so that's how I came up with that 72.03. I'll try and mix it up with a fib at the same time. I like that 72.05 that I had before. So we're going to keep the 72.05. And you can see the touches coming across. You see that? Here, here. And I'm looking at the body closes. I always tell you is I never look at the actual high and the low. That you do want to look at those if you're and I want to say not day trading, but I mean scalping. And when I say scalping, in the sense that let's say that there's a release of report. Let's say it's a big one, non-farm payroll, ECB, whatever. Then you do want to look at the high and the low. But for the most part, I like to look at the bodies where they close. My thought process is, how many people sold the top and how many people actually bought the bottom. So it's the bodies that where you'll see me going and run my support and resistance levels. Everybody, like Blake likes to say, there's no right, there's no wrong way to trade. But I've found that this is what helps me and why you'll see my resistance levels. You won't see them on these peaks or valleys. They'll be right across where I see the most volume, the touches, or what I call the touches. So I'm going to keep that 72.05 for the support. Now, resistance, I think the 72.55 is a key level. We've seen how the market has, you see how we rallied up to it, pulled back, got above it, it's support, we rallied back, a good battlefield at 72.55. So for support, for resistance, it's 72.55, but because of the body touches, I'm going to put it just a hair above it. So it's going to be 72.60. It's 59.5. 72.60. And let's go and take a look at the Kiwi. So we had our support at 66, and I left this in place just as to kind of signify that, and that's actually was a low, 66. That happened to be right there. You see that? I think it may have taken it out by 1 pip. But I left this in place so kind of like as a reminder. Okay, that's what I came up with this with this 66. So we're going to keep the 66 here. Have no problems. I'm happy to keep that there. Resistance. Well, you can see that plain as day coming across. You see right here. And once again, with the whole philosophy about the body touches, I'm going to go right there. 66.38. 66.38. There's a little bit more right in here. Well, actually, you know what? We're going to give it, see right here, body close, open, here, resistance. Okay, we like that in case the dollar does. We see a little bit of a pickup of the Kiwi over the next few days, or day or so. 66.43. We'll call 66.43. It's actually 43.5, so give it the extra half pip. Obviously still bearish. And let's go and take a look at the dollar CAD. We had 30.96 as our resistance, and where we came up with the 30.96 was that was the 61% of this move. We'll go in and pull out the old fib. Right there. 30.96. It's 30.95 and 2/10 or whatever, that's fine. 30.96. So we had that as our resistance. That was coinciding with this level here. Once again, you see where I like to put my resistance at the body closes, or my levels of support / resistance. Right here, here. And that came out to 30.93. The market rallied to 30.82.5. So that's off by 9.5 pips. Not bad, but I'll tell you what, I thought that this had the opportunity to keep pushing a little bit higher, but we've seen quite the fade here. So the 30.93 resistance now, going with the same body closes for right now on a short-term basis is going to be right there, 30.73. We had supported 30.12. And the market has so far made it down to 30.08.5. We'll give it now that will give it a little bit more room to the downside, not a whole lot. Right there, you see this one with the body closes coming across. It actually coincides with this low here, so I like that right here on a short-term basis. 30.03. So maybe we dip a little bit further. 30.03, very short-term basis here. Overall, still bullish. And let's take a look at the dollar Swiss. Now, we've had a nice run up here in the dollar Swiss. We had resistance at 97.23. This thing just flew through there. Look at that. Kiss that resistance goodbye. I mean, we just barrel on up in here. Let's take a look where we stand with the fib. We know that this market is, we knew it was extremely oversold. I mean, God, they had really taken this pair to the woodshed. Let's see if we can find a confluence. But this market had really gotten shellacked pretty good. Just past this 38%. And you can see the 97.75. I'm sorry, 90. Yeah, it is 97.75. Let me just measure that out again. 97. We're going to go and use that as the resistance, 97.75. You actually have a little bit of a hangman here if we end up finding ourselves in it, and this ends up being a little bit of a top. So probably something to go and keep an eye on this 2-hour chart. Let's take a little bit closer look. I don't know if we could, certainly can't just say it's bullish after the way this thing's been beaten up. For us to really switch it into a range, we're going to have to defend 97.47 and trade in this area here. Basically from 47 to 98 to say, okay, now we're in a bit of a range. It has broken above this 97.04, but this is one heck of a mean downtrend. So I'm still going to keep it bearish for its bias. We've had a heck of a run here, but we can easily slide back to this 97.04. Speaking of support, support would come, you can see right there, the body close would be right there, 97.21, 97.21. It comes across this top, across that bottom, so it'll be 97.21. And let's go and take a look here with the dollar yen. This has really been up here, just hanging around, not really adding on to its gains. We had 1280, yeah, we kept the 1284 in this thing. Look at this. It really marched higher. And you know, I wasn't believing the rally here in the dollar yen, but we said as long as it's above this bias pivot, it still keeps its bullishness. And once it got past this 1284, well, we've pushed up even higher now. And I know people have been fighting this thing. The resistance here, this level comes in at 1369. Technically speaking, I don't want any part of it. You know, now we're starting to see U.S. rates maybe start to bottom. We talked about this, and we're actually above that key area. Remember here, this 4025/4022 goes all the way back to 2009. And we talked about how you can, you know, overshoot it. You know, what's, you know, if you're looking over several years, you're actually going back 9 years. And let's, for some perspective, this goes all the way back to 2009. You see back here, all the way back here to 2009. So now we're starting to, we're actually above that key area here. You see here, so it makes me question, but here in the dollar yen, but I sure am glad I have not, other than my initial phase, which was, what was it, 11? I think I was short and I had to stop at 11:53 on a 2-hour close. And that, and let me see right here. No, it was 12:53. That's right. It was 12:53. So I got short. I think it was like 12:24 or something like that. But I knew that as long if we got above that 12:53, that's it. And I think it was here. And this market's continuing to move higher. And I didn't want to battle with this anymore. At this point, though, this is a very key area here, 1369. It's certainly not bearish in any way, respect whatsoever, but it's 1369, which is key. I don't know, I guess you could use that as your level in the sand. We'll actually give it that. Let me see right here, we've got 1355. It's actually going to be realistic. It's going to be 1369. This thing would really turn bullish, but I'm kind of questioning that with rates where they started trying to bottom here, but boy, we have certainly continued to move higher here. I think we may have smoked a few people out here, but it would be 1369. And we are starting to see equities weaken a bit here. So that may work a bit of as a drag here on the dollar yen. You see this 1369 coming across here. Interesting. Look how the day started, how this could be with the day. You could have a nice little, we don't know how it's going to close right now, but you could have a nice little gravestone doji here. Oh, this body's not that long. Support on the dollar yen. $13.03 for right now. 13.03. Actually, let's see. For right now, on a short-term basis, it's going to be 13.03, but this is where you're seeing the most touches here. Let's go with that 12.97. 12.97. Not much further lower, but 12.97. If you're thinking that the equities are probably open for further pullback, and U.S. rates may have topped on a short-term basis, and you see here we talked about this key 40.25/40.22 on that weekly, going all the way back to, actually support going all the way back to 2009, and now we're above it. Okay. Certainly something you may want to think about with the dollar yen. So you want to keep those in focus, your equities and your U.S. rates, which may have topped out on the short term. Just well, let's just say that we're finding a little bit of the market trying to hold, at least hold its own, patch up the sinking boat here on the bond futures, and we're defending it right now this week above that key level. Something you want to keep in mind if you're looking at the dollar yen. Let's go on and move into the cash dollar index. Well, we did the analysis here. We had it here. We obviously I put it on ForexAnalytix, and we shared that here yesterday, which was this level here at 94.68. We had the arrows that we could go and work lower, higher. It's the same thing with the euro. And we said, you know, a 2-hour close above 94.68 would target 95.20. Well, we did get to the 95.20 and then some, but it was just yesterday, this 2-hour close. You can see it right here. Right there, would target the move to 95.20. Well, we've made it to 95.20. I'm thinking we get a bit of a pause here. Here's that key 95.32. 95.32 is when we broke from this pattern right here, and we were looking for a down move in the dollar, remember? And our work was, hey, if we get a 2-hour close above 95.32, it invalidates this downside. So that's what kept us bearish as we came down here. Obviously, the dollar's turned around. I think it's, for most part, it's really more a euro story, I believe, because of what's gone on, you know, with Italy. I think we are a bit overdone here. This is a key area. The market has been turned away from this area. We're actually going to go right there with 95.32, which is exactly where we're at right now. We'll go with that as our resistance level. That's been a key area before. I didn't think we'd make it up to 32, but I did think with this 2-hour break of 94.68, I thought we'd make it to 95.20. And you can see that coming across here. You see that? So that's why I thought we'd come to 95.20. So 95.32 is going to be our resistance, although it's been a bit higher on the day. Potentially this could turn back to bullish, but we'll wait till the end of the day to determine that. We're actually at 94.33. Dollar trying to get some extra boost here. This thing definitively turns to bullish if we get a daily close above 95.53. And the euro coming under a little bit more pressure now. Support now would be $94.96. That would be support. $94.96 on a very short-term basis. And you can see here this 95.55. If we get above that, this thing flips back to bullish. But we'd have to, if we get this daily close, I actually had it right here for 53, but right there, it's 54. But a daily close above that turns this thing back to bullish. And let's go move to gold. One of the things we're looking at for a move, if we broke below 97, we're looking for essentially a target here down to 1179. Well, we've made a pretty good run down here, and we mentioned we'd make a quick move to 87.50, but that's not where it would end. But we found some support there. There's actually a little bit of support down here at 84, and they just about made it to 84. I think people are wondering why there's not a bigger reaction. Well, with the dollar moving higher, I guess gold's kind of holding its own. Although I think it's kind of like what I was referring to with the euro, is we've already lost. I think you knocked a lot of people out of the boat here. This was huge to lose this 11.97. Potentially this could work low. You would think that with the dollar pushing higher, you would think we'd even be lower here. So in a sense, just like from the previous week or previous 2 weeks, gold was holding its own against the dollar. We did break yesterday, but it doesn't want to move lower. Part of the reason I think is this move with the euro is really about Italy and their budget woes, okay? And also another thing that helped kick the euro lower was the lack of inflation, or the inflation news that we got. So it's not the type of stuff that's going to go on and, if we saw some inflation coming through, you can see gold really start to move higher. So we've already got knocked down here technically. It's just not the type of thing that's moving gold at this point. It's actually holding its own relatively well against the dollar. We've already knocked quite a few people out of the boat. It's going to be a hard time. I think we'll have to do some more homework and eventually maybe make it down here. Because now the technical picture is now bearish after getting knocked out of this area here. So we'll probably have to do more work, probably have to work a little bit lower. So our target is going to be, which was our analysis target, which is going to be 1179 here on gold. Resistance now which was yesterday's support, is going to be 1191. That would be resistance, 1191. That's 93 coming in here, but we'd have to pull this right there. That was yesterday's support, and that's going to be our resistance, 1191. And let's go move into the 30-year bond. And we did go on in, okay, 41.20. Oh, you know what? That should have been 40.20, 40.12 here. We did get as low as what, 40.08, and now it's meant to be 40.12 on the bottom. So apologies on that. Obviously, the support was going to be up in here. And you can see once again about the bonds. This level, we talked about that last week, and we were actually below it. Now we're above it. This level, 40.25, goes all the way back to 2009. That's a huge level. And we talked about all during the week. Hey, look, you can overshoot it. What's the point when you're talking about going over the course of 9 years? So we're actually starting to find gold, trying to hold. I mean, gold. The bonds trying to hold in this area, and we actually have reclaimed the 40.25/40.22-ish area, and we're above it now. So we had our support yesterday. Actually, for some reason, I had it marked as 41.12. It was 40.12. We actually dipped as low as 40.08. Right now, this is going to be support. Once again, going with the body closes right there. That'll be support, which will be 40.15. Still a ways away. 40.15. So we'll be moving this up. For some reason, I had that as 41.12. It was 40.12. Move that to 40.15. There we go. And we had our resistance at 41.27 because we said in case we break, where they're going to go to. Well, we're above that 41.01. And we do think that there's a possibility that we can move higher here in the bonds, especially if we do start to see a little bit of more of a follow through with equities. And there's that 41.27. You can see it right there. I'll pull this back a little bit. There we go. That's going to be our resistance. So if we do see further erosion here in equities, you see right here, that's where we're getting the bid, a rotation into bonds. Why not at these levels that we're at? And something you want to keep an eye on. Okay, look at equities. If we do go on and start to slide further, bonds, some value buying. We talked about that from a week ago. If you're following the dollar yen, certainly we've had a pretty good run. So if we get rates starting to finally, get a little bit of value buying in here, and equity starting to slide, it certainly leaves the dollar yen susceptible in that circumstance. But we have like I said, the dollar index has been, the dollar itself has been supported for the dollar yen. But this is a very interesting area here. Our resistance is at 95.32. So we'll see how this all holds out and plays out. So 41.27 is still going to be our resistance here on the 30-year bonds. Let's go and move into the bunds. And with the Italian budget woes, hey, you go to the bunds for safety. And boy, don't be careful getting in the way of these things. They will rip your head off. So when we're looking for resistance on the bunds, you can actually make the case right. You can see right here, that's where they did run out of gas, right there, 59.21. Well, we're going to have to keep the 59.21 because the pressure from Italy still stands. So that would be the resistance. You can see it coming right across here, 59.21. Nobody wanted the bunds. Now people can't get enough of the bunds. Right there would be support. You see right there, this body touch. See how, look, here's the body close right there. You see that? And this is exactly to the tick where the market ran to before pairing back. That's why I like the body closes. Support's gonna be 58.79. 58.79. And let's go to the DAX. Well, we certainly have gone and paired back now in the DAX in light of the Italy situation. Someone had mentioned the Italian banks were limited down. I think that's where they would try and pick things up a little bit and try and restore some calmness. The last thing they want to do is have them weak like that and then come in and then over the weekend and come into Monday and really see a disaster. And I don't want to go overboard with that, but that's why I think that they'll come up with something. You'll probably see this euro start to pick up a little bit off of these lows. Not to mention the euro is at a key technical area, and we'll get to that in the overview. So here we are in the DAX. This is good area of support. We'll actually push it. You see this body closer? That's going to be right there. And I'll pull this up, focus a little bit. Right there. And see, that's also coinciding with this little area here of volume. So that's going to be 12,166. 12,166. If we see pressure continue in the DAX. Upside, well, the upside is going to be a little bit tough with the whole Italy situation. So upside here on the DAX. Actually going to be right there. You see this body close in and see where the market tried to hold its own after that dip and then it rotated lower. It's going to be 12,266. 12,266 for the resistance here in the DAX. And here's a bias chart for today. And boy, we do have quite the day with the Italy news. We've got 15.78 for support here in the euro. And we're trying to pick ourselves up a little bit from the bottom. But this is a key area here for the euro. Just getting ready when Dale gets ready to come on. So just for a real quick recap, on the analysis in the Asian update, we were actually up here in the 40s, and I was pointing out the 1618 for the 38% of this entire move. And I was looking, had pointed out that we had a stretch target on the downside of 1606. Well, we certainly got past 1606 with this Italian budget news, but this is a very big area here. This 1583, you see all the volume coming in here. And also when I think about the move that you've fallen, you've come off in this area, the 1770s, you've already come off 200 pips. So I think anyone that was long in there, where unfortunately I did see people picking this up on the way down, may have already got cleaned out. So a very key area here with the euro. Do have someone who pointed out in the chat room, we do have an option expiring at this morning, 1633 billion at 1630. We're well below that, but our resistance is going to be 1625 with the euro, and Dale should be coming on any second if he's not already here.
Hiya, Paulie. How are you, buddy?
I'm doing good, Dale. How you doing?
TGIF, man.
Oh yeah, there you go. Glad to see you again.
You know, I don't think people would have gotten cleaned out if they listened to the European crossover on the euro. So maybe we need to, those people, you know, need to pay attention to your inflection point, support, resistance. Great work, man.
Yeah, I tell you what, it saved my bacon yesterday on the dollar index. I was, you know, the day yesterday was all about little scalps. I wasn't I wasn't able to hang on for, it wasn't like a great day for me, but what saved my bacon was, and I did okay, but some of the people in the chat room did really well that had been hanging on to trades for a while. And I'm primarily a scalper. But I'll tell you what, when I got the analysis that we did from the day before, I pointed out here that if we got a 2-hour close above 94.68, my target would be 95.20. And I'll tell you what, that saved my bacon from doing some stupid trades yesterday, because I said, you know, I just technically, I got to stick to this rule. If it broke 94.68, I cannot be trying to fade the dollar, i.e., you know, buying the euro or, you know, doing things in gold. Other than scalps at certain levels, I tell you what, that saved my bacon big time.
Well, you know,
technicals.
Yeah, you know, Paulie, great discipline, and it's been, you know, I wasn't here for a few weeks, but it's, you know, it's been fun following up and having you pass me the mic while you're here. And I know that your work is going to be available to subscribers only starting next week. And I'd wish you luck, but as I've tweeted, you don't need it because you have skills. So,
well, thank you. I appreciate that, Dale.
Yes.
You know, with trading, it's always an ongoing learning process, and we'll always learn the most from our mistakes. And said there's some good traders in our chat room. Obviously, Blake's there, still is, Grega, Joe, you, but you learn the most. I mean, we have a great community. Everybody shares a lot of great information. People very open about the daily gains, but also the losses or what they confront in the market, and that's what helps. It's that camaraderie, that team type of atmosphere that really goes a long way. That's supportive, you know, for each of us as a trader.
Dream team, buddy.
Yeah.
Dream team, the Olympic FX team, global, best team on the net. You know, I know you've been around for a while. Have you ever seen so much trading acumen on one website?
It's really a value to have so many different people. And I'll tell you what, there's a lot of great traders. Amanda's there. I mean, she's fantastic with cable. Yeah. But I'm saying we have some traders in the room that are very, very, very good. Great stuff they get from the guys.
Yes, that's why I tell people I coach them, teach them, and do it for myself. Surround yourself with people better than you, and you rise to that level. And you know, I consider you one, Paulie. So have a great weekend, and continued success with the European crossover.
Thank you very much, Dale. I'm glad to be with the team, and you have a good weekend.
Thank you, buddy.